In my last video titled WPAY just beats ULTY, I got a lot of negative comments. It clearly struck a nerve with some viewers, and I assume many of them are ULTY investors. That would make sense, because in that video, ULTY was shown as the weaker product. Of course, this is just speculation on my part. I'm not making any hard conclusions. One comment said, yeah, one payout as of this video of 54 cents on a $55 stock, which is about the same percentage payout as ULTY. No data here. Who is financing this channel? To that I say, I wish someone was financing this channel. So, Roundhill, if you're watching, some people think you're already sending me checks. Feel free to make that a reality. Another viewer wrote, all new funds go up right out of the gate. When they start paying a dividend, they'll drop like a rock. If WPAY doesn't pay out 0.81 or more, then it's no better. ULTY is $6 a share, WPAY is $54.49 a share, 9 times the cost of ULTY. Nice try. WPAY will lose half its value in 6 months to a year. This is a common misconception. The idea that one stock, being $6 and another being $55, makes one inherently better is simply false. Share price alone doesn't matter. What matters is yield and percentage return on your actual investment dollars. Let me give a quick example. If you put $1,000 into a $6 stock, paying an 80% yield, you'd own about 166 shares, collecting roughly $800 annually. If you instead put that same $1,000 into a $55 stock, paying the same 80% yield, you'd own around 18 shares, also collecting about $800 annually. The income is the same because yield is percentage-based. Price per share doesn't give one stock an advantage over another. Another comment was, comparing a fund that hasn't even been out a month yet to another fund is ridiculous. And yet, another said, beware of blatant stupidity. WPAY is brand new with zero history. No one has a clue how it will perform. Conclusion, no comparison can yet be made. I'm astounded by the idiocy. But then, the market has filled up with average Joe stock investors in the past 6 years, most of whom statistically are very poor with math and money. Why am I so surprised? Now, I assume this person considers themselves an excellent investor and thinks the rest of us are average Joes. But here's what they're missing. While WPAY officially launched September 4th, 2025, we can backtest it because it's simply an equal weight basket of Roundhill's single stock weekly pay ETFs. And those have been actively trading since late July 2025, some even earlier. That gives us a few months of data to run projections and do comparisons. Let's walk through how WPAY would have performed using the single stock weekly pay ETFs between July 25th and September 21st. We'll start with AAPW. This ETF continued to shine, rising from $36.36 to $41.90, a 15.2% price gain, and it paid $2.42 in distributions. That gave investors a 21.9% total return, one of the best in the group. AMDW fell hard, dropping from $53.20 to $45.61, a negative 14.3% price decline. Even after $5.39 in distributions, the ETF was still a negative 4.1% total return. AMZW also struggled, from $52.65 to $45.30, a negative 14.0% decline. With $3.52 in distributions, total return ended at negative 7.3%. The Broadcom Weekly Pay ETF, AVGW, held up well, rising from $52 to $55.27, a 6.3% price gain, and added $5.92 in distributions. That was good for a 17.7% total return. BRKW slipped slightly, $48.83 down to $47.16, about a negative 3.4%, but with $2.66 in distributions, it still eked out a 2.0% positive return. The Coinbase Weekly Pay ETF, COIW, was the big loser. It collapsed from $58.31 to $37.12, a negative 36.3% price loss. Even with $6.14 in distributions, total return was still a brutal negative 25.8%. The Google Weekly Pay ETF GOOW crushed it, moving from $50.98 to $60.99, a 19.6% price gain plus $5.49 in distributions. That delivered a 30.4% total return, the top performer in the group. HOOW barely moved on price, $69.55 to $69.81, a 0.4% gain, but with $11.44 in distributions, total return was still solid at 16.8%. METW slipped from $49.28 to $47.81, about a negative 3.0%, but $4.26 in distributions pushed it into the green with a 5.7% total return. The Microsoft Weekly Pay ETF, MSFW, declined from $51.01 to $46.06, a negative 9.7% price drop, and even with $4.02 in distributions, total return was still a negative 1.8%. MSTW, the MicroStrategy Weekly Pay ETF, got hammered from $49.11 all the way down to $29.32, a negative 40.3% price collapse. $5.62 in distributions couldn't save it. Total return ended at negative 28.9%. NFLW dropped from $45.84 to $42.47, a negative 7.4% price decline, but $4.39 in distributions kept total return slightly positive at 2.2%. The NVIDIA Weekly Pay ETF, NVDW, went from $51.53 to $47.31, a negative 8.2% drop, but distributions of $5.31 brought the total return up to a modest 2.1%. PLTW slipped a little from $49.24 to $48.13, a negative 2.3% decline, but $6.72 in distributions turned it into a strong 11.4% total return. And lastly, the Tesla Weekly Pay ETF, TSLW, it delivered big, going from $32.51 to $39.26, a 20.8% price gain plus $5.16 in distributions, giving it a 36.6% total return. Now, if we average this all out, WPAY would have been at a price decline of about negative 5.1%, a total return of 5.3%. Now compare that to ULTY during the same period, price decline of 13.2%, and distributions of $0.97 gave it a total return of 2.2%. So if you had invested $10,000 into each ETF during this period, WPAY would have grown to about $10,530 without reinvestment, and ULTY would have ended at $10,220 also without reinvestment. Now, I want to be clear, this short-term performance isn't the only reason I said WPAY looks stronger than ULTY. It goes beyond 3 months of data. The bigger point is in the structural design. WPAY has uncapped upside. If the market drops 20%, yes, WPAY will fall, probably even a bit more than ULTY because of its leverage. But when the market rallies back, WPAY is going to fully capture that recovery. ULTY, on the other hand, will lag behind because of the capped upside that comes with its options strategy. And before anyone jumps in to say the option premiums will make up for the upside that ULTY misses, let's be honest, they haven't in the past, and it's very unlikely they'll consistently do so in the future. And this is the reality for most covered call ETFs. They struggle to keep pace with their underlying index or stock. ULTY is no exception. Its strategy forces it into the highest volatility names. That sounds exciting, but it also means the fund often misses out on the fastest upside moves. Stocks with high volatility usually run in sharp, rapid bursts, both up and down. With ULTY's structure, you capture all of the downside and only part of the upside. If that happens a few times in a row, it's hard to see ULTY ever catching up to WPAY in a sustained bull market. On the other hand, WPAY is built differently. It technically holds 11 of the top 20 companies in the NASDAQ and the S&P 500. And here's why that matters. The top 20 largest publicly traded U.S. companies have contributed around 60% of the S&P 500's total return over the past 5 years. That shows just how much the market has relied on a handful of mega cap names. So when you look at WPAY's structure, owning companies like Nvidia, Amazon, Google, and Microsoft, you're looking at the same set of stocks that have driven the market's performance for years. Of course, past performance doesn't guarantee future results, but let's be honest, do we really think these companies are disappearing anytime soon? I don't. And that's exactly why I think, in the long run, WPay will prove to be a stronger product than ULTY. Of course, Roundhill has to keep executing on their strategy. Only time will tell if they can sustain this performance. And with that, if you found value in this breakdown, let me know in the comments what you agree or disagree with. I'm always open to hearing other perspectives. And trust me, if I see a flaw in a fund strategy, I'll be the first one to call it out. Make sure to like, subscribe, and hit the notification bell so you don't miss the next video.